Thanks very much. Great to see everybody out here. Very interesting time for palladium. We have one of the top palladium assets in the world in partnership with Impala Platinum. We're located in South Africa, and there are many companies you're going to hear from today that have a deposit they discovered that has 19.5 million ounces of reserves. Total resource is about 33 million ounces. So this is a truly world-class asset. So standard disclosure slides and forward-looking statements. So a bit of an overview of the company. We actually have two parts to the business. The mine is obviously the most important one for the value. And as I mentioned, we're partnered with Impala Platinum. It's palladium dominant. It's a 63% palladium. And we have a construction decision right in front of us. In fact, we actually announced yesterday that our partner Impala has elected to pick up 100% of the project costs effective February 1, and I'll get into the details of that in a minute. We also have a partnership with Anglo American, and interestingly, they thought enough of this joint venture to issue their own press release about it. And Anglo American, of course, is a $30 billion company. This is a private company that we formed to support research at Florida International University. Actually, we were just there yesterday, meeting with our 40 research scientists, and we're looking at putting palladium and platinum into a lithium-ion battery. And we're getting some really exciting results here. It's not something I have time to talk about now, but the focus is on lithium sulfur and lithium air chemistry that has the potential to be 5 to 10 times the power to weight ratio of anything out there. So we're really excited about this. We in this private company own all of the intellectual property and the first patent pending research here. We own 52% of the company in Platinum Group Metals, and Anglo owns 48%. Why should you be interested in us? As I mentioned, we've got a market cap, was 150 million till today. It's about 135 million today, so we're down about 10% this morning, along with everybody else. We're very well backed. Our largest shareholder is called HCI. They're a fund in South Africa, which is the pension fund of the Textile Workers Union. And they've bought about 31% of the company now, both in placements and out of the market on the New York Stock Exchange. The asset itself has both Impala and JOGMEC, which is the Japanese state company, involved, and they've invested at the asset level. Our basket price has gone up over 50% since the definitive feasibility study, and we approved this feasibility study as a joint venture on December 5th. What's interesting about that is this is not sort of a feasibility study for kids. This had 140 professionals on this job for 2 years and cost $25 million. The resource and reserves were reviewed by Harry Parker at AMEC. The design was by Stantec on the mining side. DRA did the plant design. And then we had a pleasurable review by SRK, basically 50 grumpy old men for 3 months to review the feasibility study before it was published. So done a lot of work here. We expect our mining right literally any day. We've completed 135 public meetings. We filed 80,000 pages of documents, and we do expect our mining right in March. And we just announced yesterday that we amended our deal with Impala to allow for that mining right to come in first in exchange for them picking up 100% of the costs early. And I'll talk about the Impala deal in a minute. Measured and indicated resources, as I mentioned, 26 million ounces, 33 million ounces in total, 19.5 million ounces in reserves. What's different about this is it's thick. So a conventional platinum mine in South Africa is 1 meter thick. This has 40-meter panels and 100-meter spaced levels. So we're literally drilling and blasting 13-story office buildings at a time and dropping them. It's paste backfill long hole stoping. It's unique in the palladium dominant in South Africa, and it's 140 meters from surface. A lot of the platinum mines are down now 1 kilometer to 1.5 kilometers. This is accessible by declines, and it produces the right type of concentrate. And this is very important looking at PGM investments, is not only the grade and the base metal credits, but what does it produce as a concentrate and where can that concentrate go? You have to have a marketable concentrate in order to be able to sell a product, and we happen to be right in the area where there are a number of PGM smelters, and this is the right stuff. It's got the right amount of base metals in it. It's totally shippable to the local smelters. which is one of the reasons we were selected for the partnership with Impala in the North Limb. A lot of criticism out there about South Africa. Just to give you an idea of the kind of business that you have to do there, terrible business, really. The Mogalakwena mine will produce about 1 million ounces a year this year. Their margin is better than $1,000 an ounce. So the Mogalakwena mine will produce about $1 billion worth of cash flow annually. Terrible. The Ivanhoe project, also a very thick deposit drilled off. You probably hear about that from Ivanhoe later today. And we have 1,000 square kilometer land position that we staked off the north end of the North Limb. This is where we sit on the cost curves of mines. This is independent work done by Metal Focus Group, some of you might know. The left-hand bar there, the yellow one, is Mogalakwena, one of the lowest cost mines in the world for PGMs. We're right next to that, and we benchmark out at next to the orange bar, which is Zimplats. That's interesting because it's about the same grade, about 5 meters thick instead of our 40-meter panels, so you know our feasibility study is well done. The dark purple bar, the wide one, that's Stillwater that many of you know. The narrow purple bar, in terms of size of production, is North American Palladium. Many of you know that investment, and I'll talk about that in a second. And the far right-hand end of this curve is the most important thing you could learn probably about PGMs in terms of the market going forward. Those are the conventional mines in the Western Limb, and they produce about 2 to 3 ounces per employee per month. And just think about that from a productivity point of view. 2 to 3 ounces per employee per month. I mean, long term, that's just not going to work. And in fact, we've seen a lot of those mines schedule shutdowns, including Impala Platinum, our partner. Anglo sold their interest to Sibanye. Sibanye bought Lonmin and announced 5,000 layoffs. So we're seeing this part of the business contract. This is platinum dominant, but by accident, it knocks over 1/2 ounce of palladium every time a platinum mine closes for an ounce. So because palladium here is only 26% of this basket, it cuts down the amount of palladium production, even though palladium's at $2,200 or $2,500. This is a head-to-head comparison of North American Palladium bought by our partner, Impala, for $750 million in cash. Waterberg wins on every measure. North American Palladium reserves are 3.5 million ounces. Waterberg is 19.5. The grade of North American Palladium was 2.5 grams. The grade of Waterberg is 2.24 reserves. We do have to apologize in South African context for our relatively short mine life at 45 years. And $767 an ounce cost, lower than North American Palladium, and the mine scheduled to produce 420,000 ounces. We're trading at $15 an ounce. The purchase price of North American Palladium by our partner was $216 an ounce. Mind you, it's built out. Our capital cost is $35 an ounce. So pretty simple math. What does Impala think about this project? They just elected to pick up 100% of the project costs for the next $4 million, and this is from their annual report. So this shows where Waterberg would sit on the costs in the portfolio of their mines. So it would show as the lowest cost mine in their portfolio and one of the shallowest, which is decline accessible. And it also shows their strategic plan to lower their exposure to Rustenburg, which is very deep at 1,000 meters plus, and move into mechanized mining, which they talked about in their semi-annual results yesterday or the day before. Quick comment on the palladium market. We're seeing growth in hybrids. We think that going forward, that for the next 10 to 15 years, you're really going to see the hybrid market expand. That's been captured as a lot of discussion around battery electric vehicles, one of the reasons that we're working on batteries for palladium and platinum. But the hybrid is the way to go. These use more palladium than actually other vehicles do because they cold start and stop. And a very interesting set of factors I learned from Norilsk in their presentation in Indaba a couple of weeks ago in Africa was that 3/4 of the metal in the tailpipe of a modern car can't be substituted. It's because of the temperature of the modern gasoline engine. That exhaust temperature right at the manifold is about 1,200 to 1,500 degrees. You can't use platinum there. And that's 3/4 of the metal in the tailpipe. So that's part of what's driving this market is the physical lack of ability to substitute 3/4 of the metal. And the other thing, of course, is that the automakers are up to their neck in all kinds of other stuff. And China Level 6 standards on catalytic converters have driven loadings up by 20%. As a result, that's what our basket price has done for our project because it's 63% palladium. And that's as of February 21st at $2,200 an ounce basket. So that's our basket of platinum, palladium, rhodium, and gold. And our operating cost is sitting at about $640. I mentioned our core investors both at the project and the public company level. I mentioned earlier who did the feasibility study, a very senior study, 640,000 ounces a year steady state at a $640 an ounce cost, and that includes a 15% discount at the smelter on the precious metals and a 30% discount on the base metals. So that's included in that cost. Interestingly, for our partner, that's revenue. So their view of costs is somewhere around $350. So the NPVs here, 8% discount rate post-tax, $1.5 billion on 20% up off the feasibility study. Current spot price is sitting at about $2.1 billion, and the IRR is sitting at about 32% currently. Mentioned the mine life. First production in 2023 from underground is scheduled. This is the deal we have with Impala. Just conscious of my time. So 15% they currently own. We own 50.01. So attributable to us is just under 10 million ounces of reserves, not resources. And Impala has the option now to pick up and become the project operator. And in fact, they're taking all of the project costs already. Their final election to go to 50% will come now 90 days after the mining right, which we expect very soon. And in the meantime, they're paying 100% of the project costs. For $130 million project costs, plus buying the Japanese out for $35 million, they can go up to 50%. So our job here is to let them do all that. Financial evaluation on the project, this is about $1,000 an ounce palladium a go, which is what's in the feasibility study. Yeah, I know that sounds ridiculous, right? But basically the peak funding is $640 million. Impala is also responsible for the project finance and arrangement in this deal. Project basically produces $210 million a year, $1,000 palladium a go. At current prices, it would produce about $320 million a year in positive cash flow after tax. So our share would be 32% of that, something like $100 million a year for a short period of 45 years. Current reserves will complete in 2066, and I plan to go, so just so you know. So our market cap currently is $100 million, and our share of NAV is about $750. So we're trading at something like 14% of NAV. Share capital structure, 62 million shares outstanding. We do have some debt, $20 million secured debt with Sprott, and a $20 million convertible with 2 large U.S. institutions. But we are very well backed by our 3 major shareholders that own 65% of our stock. It's going to be a very exciting year as we move into the mining right in the next month or two, and a construction decision this fall. And maybe I'll stop there for questions.